I hope everyone had a great weekend, and thank you for joining us today for our Market Monday for the week of August 12th, 2024. So much for a quiet summer, right? Last week was a very peculiar week with risk exploding out of nowhere, only for stocks to essentially recover most of their losses. In mid-July, the S&P 500 was trading at an all-time high, and there was very little probability of a recession baked in, but a lot has changed since then. From peak to trough, the S&P declined 9.7%, marking the largest drawdown this year. While these are never fun to live through as an equity investor, investors need to remember volatility is a feature, not a bug of investing in the stock market. If you take a look from 1928 all the way to 2023, the average intra-year drawdown has been 16.4%. And historically, the S&P has recovered from every single one of these drawdowns. So let's dive in a little bit of what happened last week. First, initial jobless claims came in weaker than expected. Then the following day, Warren Buffett announced he was cutting half his Apple position, which is a very large constituent of the S&P 500. And then to throw fuel on the fire, the Bank of Japan announced they were hiking interest rates 25 basis points, causing the yen to appreciate against the US dollar. So in layman terms, global investors were snapping up riskier assets and funding them with the lower denominated Japanese yen. This was a great trade until it wasn't. Even Warren Buffett acted on it earlier this year. Global hedge funds and asset managers were predicting that the yen was going to stay depressed against the US dollar and the Bank of Japan were going to keep rates lower longer than they expected. This caused the Nikkei on Monday, which is the Japanese index, to have its largest one-day decline since the 1987 Black Monday crash. It also caused the volatility index, or the VIX, to go parabolic for its third highest reading ever, behind the great financial crisis and the COVID pandemic. So as equity investors, obviously any volatility is uncertain, but we'd rather see some type of unwind or margin call versus economic deterioration or weak earnings that cause stock multiples to re-rate lower. And if you take a look at what we're living through right now versus the bear market of 2022, bonds are actually acting as a diversifier and have been positive the whole time. So going forward, a lot of focus is going to be on the Fed. So after the last Fed meeting, there was a pretty significant forecast that a 25% rate cut was going to be in the cards. Then if you take a look after the initial jobless claims report, that was fully baked in, then a slight 50 basis point rate cut. And now after last Monday, when the VIX went vertical, the Bloomberg index is fully forecasting a 50 basis point rate cut with a slight probability of a 75 basis point rate cut. So it looks like the Fed is going to do some type of rate cut here in September. Now looking forward to this week, we have an action-packed week full of data, right? So on Tuesday, we have PPI. Wednesday, we have CPI. Both of these, if they come in higher than expected, should bode well for the US dollar. Then on Thursday, we have the initial jobless claims report. If this comes in higher than expected, this will be viewed negatively for stocks. And then to close out the week, we have US retail sales, and this will really shine a light on how the consumer is faring through everything. On the last earnings calls, a lot of management companies have stated that there's been a deterioration in the consumer. They've been very strapped. So any higher than expected reading here would be viewed very positively for the stock market. So while volatility is never fun to live through and really nobody can predict what's going to happen and how this unwind is going to take place in the next few months, we do know we will get through this. And historically, there's always been volatility in the market, but the stock market has always been able to find ways to move higher and move past these events. Thank you for your time today and hope everyone has a fantastic week.